Morning, everyone. What's up? Hope everyone is doing well. Welcome, YouTube. Welcome, traders. Welcome, everyone. And in today's morning market update, there's a few things to talk about. We have the main topic of conversation is going to be the FOMC meeting minutes today, and then there's a few different little things that could be worth mentioning, right? Especially if you're trading options, especially if you have positioning in some of these meme names. Naturally, this might interest you, but the main thing that we're going to be talking about today, it is Wednesday. It's August 17th. Wow, time is just going. So, August 17th, Wednesday, we are looking at the Fed meeting minutes today at 2 p.m. Eastern time. And this is the last, I think, the last main formal meeting before we have the big Fed meeting that is in September, right? So, this is the main meeting that will give us a little more insight of what had happened in the July 26th, 27th meeting, right? So the question is, what are we looking at in terms of rate hikes to come in September? Because realistically, we are still looking for rate hikes. A lot of that inflation data came out. There was different probabilities that came out for those rate hikes, but where do we land right now? And today is, well, should technically give us a little more of an insight on what the rate hike decision might look like. So we had up until last week, even right now, there was a higher chance to look for a 75 basis point hike, right? So when the FOMC raised last time around 75 basis point, this might be the second meeting that they do so as it continues to struggle to bring this inflation down. Now, the inflation numbers did drop slightly, right? But we do need a rolling average of these things to drop down. And that could still put 75 basis points on the table. Currently, as it stands, as of now, August 17th, at about like 9 a.m., it's almost, I think it's like high 50s, about 58% chance that there is a 75 basis point hike. And then the remainder, right, just above 40-ish percent chance, around 40, let's just call it 40 and 60, 40% chance that there is a 50 base point hike. Now, these levels fluctuate. They kind of just like go back and forth 60 40, 60 40. And ideally today, which I don't know if that's going to be true because the Fed really likes to just bob and weave around the topic at hand. But today we might get a little more information of how that might plan out. So, TAM inflation data last week shifted expectations for the September rate hike to 50 basis points from 75, but now we can see that we've actually turned things around. But oh wow. Mixed data this week on housing and industrial production has pushed those odds back in favor of the 75 basis point hike, while the treasury yield, remember the 2 and 10 year, continues to flatten, right? So we're still seeing the spread. I'm pretty sure it sits fairly negative. I'm gonna just check this out really quickly before I start lying to you guys. But let me just check this spread out. You can go to Trading View if this manages to load. Let me just see here. US 10 minus US 02. So if you go to Trading View and you just type in US 10Y minus US 02Y, right? You'll get that spread that does it for you. And right now we're sitting fairly negative, right? It's about negative just over 0.4%, 0.458, right? This is pretty much it's lower than what had happened in 2006 leading up into the 08, 09 correction, or crash, I should say. It's about the same area as 01, remember, right before that dot-com bubble. So we're in we're in a very interesting area based on these yields, right? Inflation data and everything is kind of shaping up to be a little woozy. But last month, right, Fed Chair Jerome Powell provided some more details on his post-decision press conference, right, saying that another unusual large increase could be appropriate at the next meeting that will be held September 20th to 21st. And he also commented that the FOMC hasn't yet decided when to slow its rate hikes. So Fed watchers will be on high alert today for hints that they might slow down the rate hiking cycle or continue, right? That's going to be a pretty interesting event, right? Every event's fairly different. Usually the Fed meeting minutes, they don't really give too much indication of that much stuff. It pretty much just kind of overlaps with the meeting that was done beforehand, but this time around we do have a lot of data to look at. So as their June meeting, the median expectation was for the Fed's funds rate to target between 325 and 350, right, basis points at the end of the year, and that's 100 basis points higher than its current 225 to 250 range. So we still have, let me see when these actual, how many more potential hikes we have. Because if we have 100 basis points left to hit that target rate, who knows? We might either decrease the potential of the hikes, right? So we might still hike, but we might hike 25 bips going forward, or right, we might just speed it up because if we hike another 75, there's only 25 left, and we have September, November, and December for those hikes. So the into December, the odds are about 50% for a 350 to 375 range for the Fed funds future. So that's 125 basis points above the current range. So we'll see how the hike cycle goes and if they do get into that range, if they do get into that 4%. So James Bullard, one of the more hawkish Fed members, pretty much estimated 375 to 4. So obviously he's going to expect a little more at the end of the year. And with the uneven but generally positive data that has come out over the past 30 days or so, we do believe that the discussion during the Fed meeting was animated, right? Connaught says that. So Brendan Connaught and managing partner at Catalyst Private Wealth, right? So this is something he said, just one of these analysts, I guess. But any talk of recession will be particularly interesting. So I know a lot of people have shifted away from that topic, even based on this recent squeeze that we've seen, but it's still on the table, right? We still have a lot of macro sense that is kind of turning things down. So although officials didn't really provide any updates on their economic projections at this meeting, there's sure to be discussion on how the economy has changed since the last meeting, keeping in mind that the meeting occurred just before Commerce Department announced that the GDP fell for the second straight quarter in Q2. So the Fed meeting minute, right? If we wrap that whole thing up, it's gonna be interesting at 2 p.m. There's probably gonna be some hints as to what we're going to see in the coming meeting, right? 50, 75, maybe 100. Who knows what's on the table, and potentially some hints on the recession talk. So that's going to be good for forward-seeking market movement. So keep an eye on that for sure. We also have some nat gas news, right? U.S. natural gas futures ended Tuesday's session at a 14-year high, right? Lifted partly by soaring natural gas price in Europe, naturally, that have climbed in recent days. And we'll probably see that climb into the winter and to their highest level since Russia's invasion of Ukraine, just shy of all-time highs. So front month NYMEX natural gas futures, right, for September delivery settled at nearly 7% to 9.32, right? So that's wow, that's a lot. Last time I checked natural gas, I think I've traded only once in my life. It was at like 3 or something. So the best closing level since August 2008, and gas was trading at negative 66 in Europe, and a record 57 in Asia. So we'll see how those shape up. But other factors that are contributing to this include the heat wave in California, higher air conditioning demand than previously expected, and forecasts of more hot weather and technical and options trading, right? A lot of order flow coming into this. Now, we saw some of the retail data that came out this morning. About expectation, give or take, right? And we saw some of that retail earnings affect some of this data, right? We saw Walmart yesterday that gave a solid forward guidance after just weeks ago giving a hint that it's not going to be going that great. So it did help that retail sector perform extremely well with a gap higher and continuation on Walmart. So we'll see how that shapes up. It did have a good effect on other retailers. It did try to help Amazon out. And again, we'll see how long this euphoria lasts. But one of the main things in the space of options and stocks is all this memery, right? We've seen a lot of meme stocks actually just explode again. There's been short squeezes in them. Highly shorted names like Bed Bath and Beyond. It's one of the names that soared about 30% on Tuesday, and it's up about 25% pre-market here. There's a level. I was just watching it. I don't really trade them that often, but if you're going to take a look at it, 30, 40 on Bed Bath and Beyond is a massive, massive resistance that was rejected time and time again. So see if it could rip through that area, and it could squeeze a little more. We've seen that the shares have risen over 300% since the end of July. So it's been about 2 weeks, 3 weeks. And at one point in the session, Bed Bath and Beyond was up nearly 79% on the day. So this fierce activity prompted a lot of trading and halts for volatility, and it's up aggressively today. So keep an eye on that, especially you options trader. 30, 40, keep that area in mind. They could squeeze above that area. So the rally also came as the stock continued to draw attention from short squeezing meme traders that followed very, very aggressive call buying from GameStop and other things like Chewy and super, super out the money options positions on Chewy were bought for January 2023. 1.6 million shares with strikes that are close to 60 and $80. So it's fueling a lot of this squeeze. If you take a look at Chewy, for example, like it's being priced at like 50 bucks. It's down a bit pre-market here, but priced pretty heavily here. Pretty strong last few days. So we'll see between 60 and 80 those strikes are being hit pretty hard. But Bed Bath and Beyond, you look at AMC, GME, all those names, all those meme names that could get squeezed. So in terms of markets, right, futures markets, we're down pretty heavily from a key area. If you guys were in the futures room yesterday, you would have seen that area. We were targeting that 43.25 area, and we've slipped pretty aggressively through that. Keep an eye on 42.80 today. Huge level from yesterday, right? If you follow us on Twitter in your community.tradeproacademy.com, you'll see that was our main pivot from yesterday, which we tried some longs from. But keep an eye on 42.66 as well, right? You start toppling under that between 70 and 66, huge support structure. You start toppling under that, there is going to be a decent bit more sell. And I'm going to be looking for some of that downside today, right? If they start trying to buy this off the open, just keep in mind where those key resistance points are, right? So let's open up these live rooms here. Check us out at community.tradeproacademy.com where you can enter our free Discord and also our website. We got those masterclass for futures and options. So today, the main event, just to recap, 2 p.m. Fed meeting minutes to talk about the event from the end of July and give us a little more insight. How are they going to hike rates and where are we going to go from there? So thanks all. Enjoy. Happy Wednesday. And we'll see you in our live rooms.